Hello everyone, and thank you for taking the time to review the Morgan Hill, California real estate market analysis for December 2008. My name is Robert Whitelaw, and I'm a member of the National Association of Realtors and a licensed real estate broker in the state of California, and also a certified ePro. And in addition, I am also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of southern Silicon Valley. Now let's go ahead and jump right into the numbers for Morgan Hill. Now we're going to look at past years to start off, and as usual we're going to start with our inventory numbers. Now again, this is just the month of December, going all the way back to 1999, so there's no seasonal things to take into account here. These are all the same month. Now we'll look at those inventory numbers, and you can see we've actually got some fairly good news this month. In December of 2008, we can see a relatively flat amount of growth between 2007 and 2008. And when you compare that to 2006, 2005, all the way going back to 2004, you can see we had very dramatic increases in inventory. So this is actually fairly good news. If we can start getting control of this inventory, that's really one of the first steps towards seeing a more balanced market where we're not completely out of whack with either way too few homes for the number of buyers that are out there, or way too many homes, or way too few buyers for the number of homes. So get more of a balanced market going. So this is a good sign. Inventory is only up 2.55% from December of last year. That's only 6 more homes on the market right now in the inventory in Morgan Hill than last year. So I'd call that very good news for our market. If I'm hoping this is a trend that will continue, but we'll see, because as you know, if you've been listening to my past few presentations, you know that number's been increasing pretty steadily, but as we've gone on, we have seen kind of a slowing of the rate at which it's been increasing, so that's kind of a comfort. Now the new listings, let's take a look at those. Now these are the homes that were added to the month, or homes that were listed during the month of December. We can see that is up 11.9%. That's 5 more homes listed in December of 2008 than in 2007. That gave us a grand total of 47 homes that were listed in the month of December. Not a dramatic increase, but from last year. But last year was also a high water mark in terms of homes that were listed. And as we'll see in some future slides here, a lot of these homes that are listed, it's not particularly good news, because a lot of these homes that are coming on the market are short sale and foreclosure properties, so they're not coming onto the market under the best of circumstances. And also, just to recap, I don't think I mentioned that the inventory is now sitting at 241 homes total. Now let's go ahead and jump over to the solds. When you look at this, you'll see that we've actually had an increase in solds. That's actually pretty good news. Solds actually remained fairly healthy 2004, 2005, 2006, and last year took a big hit. We've seen some recovery in that this year. Again, I think a lot of that has to do with folks coming out to take advantage of the fact that we've got short sales and foreclosures in the community. Again, some future slides I think will give you more good information on that. Now, sales are actually up 41.67%. That's 10 more homes sold in the month of December in 2008 than the same time last year. So that's really good news. That gave us a grand total of 37 homes sold for the month of December. Now, as I usually like to do, I want to share with you the ratio number. Now, that's basically the total inventory divided by the number of homes sold. And what that tells us is how many months of inventory we have on, how many months it would take us to sell our inventory if all these numbers froze where they are now. Right now, we have 6.51, about 6.5 months worth of inventory on hand. That is actually pretty good news. We've been up in double digits for quite some time. Having it down to 6.5 is actually pretty fantastic. I think our increase in sales has really helped us bring that number back into control a little bit. Another way of thinking about this is that for every home that's sold in the month of December, there were about 6 or 7 homes trying to get sold. So still quite a bit of competition for sellers to get the attention of buyers out there. If we compare this to last month, in the month of November in Morgan Hill, we had a ratio of 15.89, so almost 16 months worth of inventory on hand if the numbers had frozen at their November levels. Now, if you compare how we're performing right now to the county, we're actually doing pretty well, and this is also good news. In the county, the ratio was 6.85, so it was about 6.8 months worth of inventory. We're actually a little bit below the county average, which is a good number to be below the county average on. And in past months, we had been above the county average. So we've seen a pretty good December in Morgan Hill as far as some of these numbers are concerned. Now let's go ahead and take a look at these same numbers, but focus more on the recent months. The changes that you see here, the fluctuations you see here, will represent seasonal changes. You can see from this particular graph that we're going all the way back to August of 2007. And of course, the first thing we're going to look at is the inventory numbers. And I want to focus on these numbers for a moment, because we're going to try and look at this not just from the standpoint of where we are now, but also see what happened at the same time last year. Are we seeing the same sort of performance we did last year? And can we use this information that's available to us to sort of get a guess on where we're going to go from here? Are we going to see anything substantially different from what we saw last year? Now, if you go and you look at the time period from about October to December of last year, you can see that we got a pretty steady decline in the October and November and December numbers, very similar to what we're seeing this year at this time. So I'm not seeing a lot of indications that we're going to see a particularly different level of performance. We might see that the increases or decreases, excuse me, are more mild. But they're fairly close as far as how they're emulating what happened last year. But let's take a look at, we can see that December we had our low point as far as inventory was concerned, and then in January we saw a really big boost. Now that's fairly normal. As homes go off of the market for the holiday season, we will tend to see a jump in January and February as folks try to get those properties back onto the market. Now, because of the number of homes we have out there that are not what I'd call a discretionary sale. In other words, a lot of the folks out there trying to get their homes sold are desperate to get these properties sold. So I think we've seen fewer homes go off the market this year than in previous years. My guess would be that we will see inventory increase in January, but perhaps not by as much as we saw it increase last year. So my prediction will be that yes, we will see an increase in January 09 of inventory, but we won't see an increase that's on par with this increase we saw between December and January of last year. Moving forward, I think that we'll see a relatively similar ramping up of inventory as we head into those summer months. But we've got an awful lot of foreclosures and short sales out there, so I think those folks just tend to stay on the market. So that's just another reason why I think that we won't see quite as big of a jump in January, but we'll see how that pans out. Inventory is actually down 15.73% from November of 2008. That's 45 fewer homes in inventory than we saw in November, so that's fairly good news. Now, if we go ahead and look at the homes that were listed, what kind of information can we get from that? Now, you can see we've actually got pretty flat performance when compared to November. It stayed relatively steady. In fact, it's continued to go down from September to October to November into December, where we are still just a couple of houses less, I think, than November. In fact, we're down 2.08%. That's one fewer home listed in December than in November. It's not anything statistically significant, but it is one home less, which is always nice. You can see we saw the same sort of performance last year. There was a steady decline from October, November, and December. You can see those numbers really declined from October to November. We had much bigger listings happening in October of last year. And this year we had a little bit fewer. So that's generally good news that we've seen fewer. Then, of course, in January, the listing rate increases for basically the same reasons that the inventory numbers go up, because that's when folks come back onto the market after they leave the market for the holiday, so that they're not being bothered trying to get a property sold. Again, I think it'll be not as big of an increase January 09 as it was in January of 08, because I think simply a lot of the properties that normally go off of the market for the holiday season didn't go off this year because of the level of importance that people attach to getting those properties sold, and they didn't want to lose the time that they needed to try and get that property sold. Now, as far as solds are concerned, we've actually had a pretty nice boost here in December, which we also saw last year, but not to the same degree. We actually got a much bigger boost this year than last year. It's actually up 88.9%. We sold 16 more homes than we did last month in 2008. So that's really good news. Now, if we get anything out of this for last year, we can see we did get an increase in December, not as much of an increase. January saw a pretty big drop. Now, remember, the data you see for January usually represents the fact that during the Christmas holidays, you don't see as many people going into escrow. Remember, escrows take about 30 days, so the escrows you see closing in January probably were actually opened in December or earlier. So that's usually why we see a pretty dramatic dip. I'll be honest with you, though. Anecdotally, I've seen a lot of action in December. I've seen a lot of people out there looking at homes trying to take advantage of the short sale and foreclosure prices, and I think we probably won't see as big of a dip, if a dip at all. It wouldn't surprise me if we saw either the same level of sales in January, or maybe just a hair less. I really can't. I really don't think it'll be that low, and I think that as we ramp up into the summer, we'll see continuing increases in sales. But I think we'll just see more robust sales earlier in the season than we normally do. Now let's go ahead and take a look at the short sales and foreclosures data. For those of you who are regular viewers, you'll know this is a new slide. I just introduced it with my last presentation for Santa Clara County, and I'll tell you, there was a little bit of a delay between doing this presentation and my presentation for Santa Clara County, and after running the numbers for Santa Clara County and seeing that the overall amount of foreclosures and short sales were comprising 60% of the homes that sold in the county at large, I was very concerned about doing these numbers for Morgan Hill, since Morgan Hill, pretty much going back a while now, has been performing below the levels of the county. I didn't want to confirm to myself that for short sales and foreclosures were now comprising some insanely huge amount of the properties that were selling in Morgan Hill. And the good news is I was pleasantly surprised. Now, I was pleasantly surprised because I knew how the county had performed in general. Maybe some folks won't be happy to hear this number. The first thing I want to share with you is that the news is not all horrible. 46% of the homes that sold in Morgan Hill were conventional sales, just regular folks trying to get their homes sold and regular folks trying to buy them. 19% were short sales, so those were homes that weren't in foreclosure, but the seller had negotiated with the lender. The seller had negotiated with their lender to get that home sold at below what they owed on the property. 35% were foreclosures, so a pretty good chunk were foreclosures. The good news, that comes to a total of 54% of the properties that sold in Morgan Hill in December were short sales or foreclosures. So that puts us below the county average, which is great news for Morgan Hill. Morgan Hill is usually I hate to have to say this, but the whipping boy for a lot of these statistics when it relates to the county. So we're actually finally performing better than the county, which is good news. Even better news, last month in November, 74% of the homes in Morgan Hill that sold were foreclosures or short sales. So this is actually pretty good news for the community to see that fewer of the homes that are selling are short sales and foreclosures than last month. And let's go ahead and jump in and take a look at home prices. The first ones we'll look at here are just the average sales prices. Again, I don't think this is any surprise to anyone. This has been the trend in comparison to last year, pretty much all year long. As we wrap up 2009, we're still seeing wrapping up 2008, we're still seeing just big discounts on average home prices. A lot of this has little to do with the spread of homes that are out there. Remember, these are just homes that sold. This doesn't represent every home out there. These are just the ones that actually sold in each one of these years for the month of December. Now, the average home price was down 25.02%. That gave us an average home price of $657,083. That was a dollar change from last year of decreasing by $219,292. So lots of big discounts to be taken. Now remember, we're still seeing action at some of the higher price points, but as we'll see here in a moment with the median price, which is coming up right now, while home prices are generally as just the total number of homes that are getting sold, still tending to be just below the average sales price. That median and average are close enough to me to indicate that we've really seen a very solid move on the part of buyers into the price range below about $650,000, $670,000. That's really where the action is happening. That's where most of the homes are getting sold. You'll see here in a moment we've still had some homes that have sold at the higher end. Now, just to completely cover the median price. Median price was $622,000. That was a change of 23.4%. So 23.4% decrease in the median price of homes from compared to last year. That gave us a dollar change of $190,000. And remember, the median is basically where the house right in the middle sold for. So if we had 100 homes, the homes right in the middle point, that 50th home would be right at that price point. So 50 homes sold below that point, and 50 homes sold above that price point. So you can see that the emphasis was having those homes be just a shade below where the average is currently resting. Now, the highest priced home was on 1965 Pear Drive. That sold for $1,443,888. It was originally listed for $2,069,000. So basically, we got about a $600,000 discount on that home from its original asking price, and that was on the home on the MLS for 319 days. That was on the market for 319 days. Basically, that's a new construction home too, and to be really honest, that was a beautiful home. So I'm glad to see that one finally moving, but it had been on the market for a really long time. Another home that I saw, and this was interesting. This is when I took a look at myself as a potential investment property. This was home that was this was a real estate owned. This was owned by a bank. The challenges with this particular property, and remember, this was the lowest price paid in Morgan Hill in December. Inside, it was completely, there was no drywall, no nothing. It was completely ripped out. It was bare down to the studs. This home sold for $212,000 on Lindo Lane in Morgan Hill. According to my information here, it was listed for $212,000, so it sold for its asking price, and it was on the market for 71 days. But remember, that was a foreclosure home, and if I'm not mistaken, there had been an attempt before it went into foreclosure to get it sold. So I'm not sure about that. I thought I may have seen that property a while back, but I'm not sure about that. But anyway, so the state it did sell in, completely torn down to nothing. Anyone going in there would have to spend quite a bit of money to bring that up to livability levels. Now, the average price per square foot in Morgan Hill was $287.43. That's up from last month, which was $278.26. So that's all good news. It's a good way to finish off the year. Now, if we take a look at the home prices, just going back to past months, now remember, this is, again, seasonal influences will apply here. We're going to, again, go back to August of 2007 when we examine these numbers. And this is going to be home prices. Get sort of an idea of how things have been fluctuating. We can see that clearly, if we're sort of averaging this out in our minds, the trend here is downward on average, with a few seasonal peaks. June, obviously, we got a little bit of a peak there. When the summer season starts, you usually get a little bit of a jump. As far as the median price goes, it also fluctuated quite a bit, but even then in June, you can see that the median was quite a bit below the average, which meant that the larger number of homes that were selling were below that price. So the average was a little bit artificially high, probably because of a few homes at the high end that sold and sort of skewed those numbers. So is there anything we can glean from this? Really no, simply because it's really just giving us an idea of where the average is heading over the long term, and really it's hard to argue that it's doing anything but tending downward. So I think we're just going to see continuing decreasing prices right through the winter season. It wouldn't surprise me if we get a bump in summertime, but I think a lot of other things have to happen in the economy before prices really start to recover. So I would argue that we're going to continue to see a trending downward. Now, the average home price compared to November to December is actually up. This month it was up at $657,083, as I mentioned before. It's actually up 9.19% from last month. That's a $55,295 increase. The median price change increased by 6.7%. That's a $39,050 increase. Again, the total number of homes sold was 37 for the month. Now let's go ahead and take a look at the cumulative days to get a home sold. The reason why I point out that this is a cumulative number is usually there's a little bit of a shell game with how many days that it takes to get a home sold. It's reported under two fields in our multiple listing service, which is a little bit annoying, because the one is just the days since the last time it was listed, which you can do as many times as you want. The cumulative number is how long it's been on the market since it was originally listed, with nothing over 30 days of a break in that attempt to sell it. So in other words, if I tried to list a home a year ago and at one point took it off the market for 2 weeks, its cumulative days on the market would still be 365 days. But if in the middle of the year I took it, or if, say, at the very end, let's say I'm at day 360, or actually better, 330, and I took it off the market until day 362, which would be 30 days, and then listed it again on the MLS, it would show up as, after 365 days, it would just show up as 3 days on the market. So sometimes there's a little bit of a shell game with this number. I usually go through and correct for it for you with the numbers that I present, just so we can get a more accurate depiction of what these numbers are. And as I said, these are all cumulative numbers. And the good news is we're actually down from last year. It's taking less time in December of 2008 to get a home sold than it was taking in 2007, and not by a small amount. It's a pretty good decrease. We're getting about an extra 28 days to get our home sold, which is kind of nice. Currently, the number is obviously at 121. That's down 28 days, a percentage decrease of 18.79. Now, the lowest days on market in December was 0 days. That usually means that either the home sold before the person even got a chance to put it on the MLS, or it's sold and then someone, just to make sure and contribute their information to the MLS database, put that listing in. That can sometimes happen if an office is holding a listing as a pocket listing where it's not being put on the MLS. That might be actually at the request of the seller that doesn't want to participate in the multiple listing service for whatever reason. I'd never recommend that, but there are folks who for one reason or another sometimes feel that that's the right way to go. Now, the longest days on the market was 425 days, a staggering amount of time to get a home sold. The next closest to that was 319 days. Now, just to sort of give you the breakdown, because I like to give you an idea of where these numbers are weighted. You know, where is the true number here? Because sometimes one property can throw off the whole number. So let me give you the breakdown. As I said, there was one home that sold in 0 days. There were let's see, and then there were 2 homes that sold in 1 to 7 days, 4 homes that sold in 8 to 30 days, 6 homes that sold in 31 to 60 days, 3 homes that sold in 61 to 90 days, 13 homes that sold in 91 to 180 days, and 8 homes that sold in more than 180 days. Now, 18.9% of the homes that sold in less than 30 days. So we can see that right now, the realistic number, now this is obviously a number that represents all the homes that sold. If we assumed that some of these crazy out there 400 and something day numbers weren't realistic to include, we'd still have an exceptionally high number of days on market to get homes sold. The reality is that you need to be really working with your agent to pick the right number. Your price is very important. How you look in your price range compared to other homes in that price range is extremely important. You really need to be putting some special attention into getting your home sold right now if you're going to have any hope of doing it in a reasonable amount of time. Now let's go ahead and take a look at these same numbers just in the past months. Again, this is going back to August of 2007. We can see here all the days all laid out. Now month to month, sometimes you can see some pretty profound jumps. A lot of that can be statistically explained by just one home that was on the market for a very long time. I know March back in 2008 was one of those months where that 219 wasn't a very realistic number, simply because it was there was one home that I think it had taken over 500 days to sell that month. Pretty normal progressions this month. I think what we're seeing here is a pretty stable part of the year from September to now, and I think these are pretty realistic numbers, pretty realistic expectations if you're someone who's about to put your home on the market in Morgan Hill. And of course, a lot of this breaks up into some different interesting numbers based on price ranges. Something if you're interested, Morgan Hill is an area I'm intimately involved with. If you want some specific information on your home, I'd be happy to put that together for you. Now, when you compare it to November of 2008, the days to sell is up 17.48%. That's an 18-day increase from last month. So not any huge dramatic changes here. Is there anything we learned from this that can inform us about what's coming? Well, we can see that in November, December of last year, we saw an increase from November to December, but a really huge increase that we just aren't seeing this year. But at the same time, we had much lower days on market back in the September, October, November timeframe. Now, one thing interesting to note about days on market is that when sales tend to increase, this number tends to go up, and sometimes dramatically. Why? Because since you're selling more homes, you're tending to take homes off the market that have potentially been on there for an extremely long time. This is a phenomenon that occurs particularly in markets like this, where we have such a huge inventory of properties that have been on the market for so long. In a normal market, you usually have a fairly small percentage of the overall inventory that's been on the market for a very long time. That's not the case now. We've got a pretty good selection of properties that have been out there for a while. So what I would expect to see is if we see some of these increased sales numbers that we're hoping for in the coming months, expect these days on market numbers to actually show higher, simply because we're flushing out some of those old properties that have been on the market for a really long time. Okay, now I appreciate you taking the time to listen to what I have to say in these market analyses. If you'd like to see any of my other YouTube presentations, or listen to my weekly podcasts, or read any of my articles on real estate, you can find those at www.soldbyrobert.com. Also, if you'd like to email me with any ideas, suggestions, observations, or anything else you'd like to share with me, you can send those to me at robert@soldbyrobert.com. Or if you prefer to just pick up the phone and give me a call, feel free to do so. I'm at 408-852-0525. Or if you're living here in the 21st century with the rest of us and you'd rather use AOL Instant Messenger, Google Talk, or Yahoo IM, my screen name is The Rebel Broker. On Skype, the screen name is Rebel Broker. And of course, referrals are always appreciated. If you or anyone you know is interested in purchasing some real estate in the Silicon Valley area, I would be very happy to help you out. Feel free to get in touch using any of the means described above. And if you're interested in buying real estate anywhere in the United States, I can help you find the right agent. Feel free to give me a call. Let me know what you're interested in, whether you're a first-time buyer or someone who'd like to get into investing, or you're looking to sell your property. I can turn you on to the perfect agent for your needs. Just give me a call, and I can take care of that for you. And I put that in there twice because it's that important. I hope you all have a good day, and I appreciate you coming out. Look forward to talking to you next time. Bye-bye.